This is financial management, not management, but financial reporting. So we still continue with the paper, the mock paper that we were looking at. And let's start with question number 4. Question number 4. Are you there? Are you there? Question number 4. Question number 4. Then we move to, I think we will be remaining with 2, the first one and the second one, that we are through with this paper. So please confirm whether you are in question number 4, because this is a concept from topic number 1, mixed with topic number 2. Are we there? Are we there? Are we there? Remember, this is August 2020. So, question number 4. It is 4A. So, and I read, on 1st January 2019, Blakewood Limited entered into a contract to lease an item of plant and equipment from the supplier for a 3-year period. The terms of lease were that Blakewood Limited was to pay 500,000 shillings each year, with the payment commencing on that 1st December 2019. Initial direct costs incurred on the lease amounted to 30,000 shillings and were paid for by Blakewood Limited. The plant and equipment had the remaining economic useful life of 5 years at the inception of the lease. The lease contract did not contain any purchase option for the lease. Blakewood Limited can borrow at a rate of 10% per year. Good. Analyze the accounting treatment of the above lease transaction for the inception and for the 3-year period of the lease contract. That is the question, class. And I would like to ask you a question. Which type of a lease is this? Which type of a lease is this? Which type of a lease? Remember, we have 2 types of leases. Finance lease and operating lease. Now, which kind of a lease is this? Which kind of a lease is this? Okay, for the interest of time, this is a finance lease. This is a finance lease. You see, the useful life of this machine, or this item, that is item, is 5 years. And this person is leasing for 3 years. See, it is for the better part, for the better part of these items. If you look at the percentage, 3 out of 5 times 100. How much is that? 3 out of 5 times 100. Somebody who can give us this very fast. What is the proportion of the item or the useful life? It is 60. 3 over 5. Yeah. So, it is 60%. Okay. Okay. So it's not going beyond 75. Okay. I thought 3 would go up there. I thought 3 would go up there. Okay. Good. Good. So this type of lease, and they are saying something else, that the lease contract did not contain any purchase option for the lease. So at the end of the lease, there's no purchase. There's no purchase. So let's see. Let's see. How can we analyze that? How can we analyze that? How can we analyze that? How can we analyze these? Is it possible for us to compute the right of use asset? The right of use asset. Is it possible for us to compute the right of use asset? Is it possible? Yeah, it is very possible for us to get the right of use asset. For us to get the right of use asset. So the amount in question here is 500,000. And this is paid every year. It's paid every year. The 500,000 is paid every year. And this is going for how long? It's going for how long, class? Enda kwa muda gani? First of all, need to get the lease liability. Which year, please? Karanja, we're still looking at the mock that you did, August 2022. In question number 4. In question number 4. So going for 3 years. Somebody. We want to compound this for 3 years, or to get the lease liability for the 3 years. We usually get the present value first. So it will be, the rate is, what is the rate? 10%. Yes, the rate is 10%. Raised to -3. Itakuwa ngapi? How much will that be? How much will that be? Because although this is an annuity, it is an annuity, then I can opt to use the annuity formula. Let's use the annuity formula. It will be 1 minus 1.1 -3. So how much will this be? Lease liability. First of all, we compute lease liability. What will be our lease liability? Somebody just give me that. My lease liability itakuwa ngapi? Lease liability, somebody just write. The deposit is made 500,000. 500,000. So once you discount that, class, unapata ngapi? Discount that. Somebody, you can as well use the table. See, just check the annuity table. Just check the annuity table and see what you'll get. See what you'll get. Of 43, 426. Of 43, 426. That is the lease liability. That is the lease liability. Of 43, 426, the lease liability. Now, I want us to use that to get the right of use asset. Right of use asset. So you get right of use asset. We say that we pick lease liability, which is now 1243,426. We add any cost that any direct cost. Class, what was the direct cost in this? We add any direct cost, lease liability plus direct cost. Direct cost tulikuwa nayo ni gani? So that we can get the right of use asset. It is 30,000. Yeah, it's given there. 30,000. So what is the right of use asset? The right of use asset, itakuwa ngapi? The total. The right of use asset itakuwa ngapi? How much will that be? Total. So 1273,426. 1273,426. That is the right of use asset. To record this transaction, we all know that this is now at the date of inception. At the date of inception, we know that now the right of use asset that is our debit side, or we debit that, the 1273,426. That one is debited. Then we have this 30,000. It is cash at bank. That one we credit 30,000. And the remaining amount ndio nini sasa? Remaining amount? Our remaining amount is the lease liability. Lease liability. Is it credited or debited? Lease liability to enter this transaction? This is a credit, which is this 1243,426. Yeah. Which question being handled today? Yeah, we are still proceeding. It is question number 4 of August. I hope somebody shared the paper. So these are some workings. Still doing some working. So our right of use asset is this. And remember, right of use is like our asset. Then we have liability. We have right of use and we have liability. Good. Examiner wanted us to analyze. When you're told to analyze and you're given some more marks like these, you have to do several things. You have to do several things when you're told to analyze. First of all, we can check and see what would be the depreciation. What would be the depreciation of our liability or our right of use asset here? This one will depreciate. This is like our asset. So depreciation itakuwa ngapi? What will be the depreciation so that we're able to bring out on the extract, because we shall be required to come up with the extract of the income statement, extract of the balance sheet. So depreciation would be equal to, we use the straight line method, 1273,425, 426, that is, divide by 3. That is the period the receipt stayed with the item. So what is the depreciation at that point? What is the depreciation at that point? Itakuwa ngapi? Depreciation. Divide by 3. Utapata ngapi? 42, 424, 475. 424, 475. 424, 475. That is the depreciation. That is the depreciation as far as this is concerned. And since this went for 3 years, 2019, 2020, and 2021, that means we shall be having a cutting across depreciation. That is the depreciation each year. Depreciation each year. And is it possible for us to get the interest? The interest earned. Is it possible for us to get the interest, by the way, class? There's a part of interest. Interest from what we have there. Is it possible? Interest tunapata namna gani? The rate is 10%, sio? Na ikumbuke kwamba ni this interest is at a reducing balance, ndio? So interest ya mwaka wa kwanza 2019 itakuwa ngapi? Interest. Somebody, I remember interest is charged on this amount, sindio? So what is the interest of this? 10% of this. The interest mwaka ya kwanza. Interest itakuwa different interest. Maybe 2019. It will be equal to 10% of 12,434.26. How much is that? That is 2019 interest. So that is like ngapi? To a whole number. Make it a whole number. Make it a whole number. Interest for 2019. And then see 2020. Somebody, 10% of that. 12 for 124, 343. 124, 343. That is for 2019. That interest is to be claimed. So let's get the interest for 2020. Remember what we were doing? It is 12,434.26 minus 124,343, and then we look at 10% of that. Itakuwa ngapi? This minus the interest, then 10%. Itakuwa ngapi? How much will that be? Yes, interest kwanza. Remember, still working on towards analyzing the whole of this. We shall be coming up with the extract. Give me the interest at that point. Yeah. Naomi anatupatia 2020. Or else I could have this 111. 111. 111. 111. You're getting 111, eh? 111. Almost close to what we had there. Okay. Kwanza tuondoe hii. First of all, remove that. Interest for 2020 class, how do you think we are going to get it? Because I can see what you've given me there. Not yet there. Not yet. How do you think we're going to get the interest? Just for 2020, that is. The finance cost for 2020. How do you think we are going to get it? How do you think you are going to get it? Let's read the question here. Let's read the question here. Okay. The installment paid is 500,000 per year. The installment is 500,000 per year. For us to get installment for the second year, will it be affected by the installment? Will it be affected by the installment? Will it be affected by the installments? Of course, yes, yeah? Yes, of course. So, it is 12,434.26 minus 500,000. This is paid. The payment was made at the start or at the beginning. That is where the difference was coming from. Payment of this, is it made at the start or at the beginning? Plus, the start at the beginning. Payment yetu. Payment of this installment. Now for the interest, are we going to add it or less? Hapo ndio nataka tufike. Are we going to add it or less? The interest for year 2019. Hiyo ni ile scenario tulitumia in our last question. The interest in this case, are we going to add it or less? I know the installment is going to be paid, yes. What about our interest? Or maybe, give me this. How much is this? Ukishatoa hapo kwanza. Just to read this. Ukitoa hiyo unapata ngapi? So that now we look at our interest. Hiyo 12,124,348. Ukifanya hiyo unapata ngapi? How much are you getting? 12,43,426 minus 500,000. Unapata ngapi? How much are you getting? Yes. 74,343. Okay. 74,343. So whatever that you are getting, you add interest. You add interest from the previous. We accumulate it like that. You add interest from the previous. Hebu ongeza hiyo interest 124,343. Itakuwa ngapi? 144,343. Itakuwa ngapi? When you add that interest, unapata ngapi? We can as well add together. I've just joined. It's August 20, question number 4, Vincent. Question number 4, just check. Question number 4. So let's add that together. 867, 768. 867, 768. Good. Now you apply your rate. 867, 768. 867. Whatever that you get there, find 10% of that. 10% of that. So what is the interest? That. Interest takuwa ngapi? 86,779. 779. Now we do the same to the year 2021. Year 2021. To the year 2021. What do we have? We have 867. Oh, I have not captured that figure. Okay. We pick it here. We get here that figure. Your figure ilikuwa 8 what class? That figure 867, 769, 867, 769. Okay. Now that one, we less 500. We add 86, 779. 10% of that. Hapo ngapi? How much will that be? 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 What will be the interest at that point? Unapata ngapi? 45, 455. 45, 455. 45, 455. 45, 455. So we have interest, we have depreciation. So we can try and come up with a loan amortization, lease amortization schedule, lease amortization schedule, lease amortization schedule, or maybe the extract, whichever that we can opt to start with. Now, maybe come up with the extract if we wish. We can start with the extract. Or we can start with the loan amortization or lease amortization schedule. Let's start with the lease amortization. Schedule. Lease amortization schedule. We have here we can call it opening liability. or else let's call it the balance brought down. Balance, lease liability balance brought down. Then finance cost, which is the same as interest, lease payment, then closing balance carried down. Closing balance carried down. So just a bit here. Closing balance carried down. Good. Now, let's see whether it will help us to get to where we want to be. This the year is 2019. The balance was 1243,426. Interest already I have for 2019, 12,343, 500,000 paid, and I got what will I get as the closing balance? It is 8. Closing balance class ya hapa ilikuwa ngapi? Closing balance ilikuwa ngapi? 867,768. This closing balance will be my opening for 2020. 867,768, and its interest is here. 86,778, 779, 500,000, and then balance ilikuwa ndio gani hapa? Balance, the balance carried down in that year 2020. 454,545. 454,545. So that one is the one that was transferred. 454,545. Interest yake ni 45,455, and we are lessing 500,000. Takuwa na ngapi? How much shall we have? Hapa mwisho unapata 454. Hiyo ni 454 anete. Ndio balance. Ukisha chapa hii alafu utoe hii, unapata 450. Zero. Okay. Anet, yeah. Okay. 0. So that is the lease payment. But now there are some things we need to put into account. Some things we need to put into account. For example, an amount like this, huwa tunaipa jina. Our 454, huwa tunaipatia jina. It usually go when you're preparing the extract of the balance sheet. Hii huwa inaenda kwa non-current liability. When we are preparing the balance sheet. Inaenda kwa current, non-current liability. What do you think will go to the current liability? Current liability class? Of course, current liability in the year 2019, current liability unafikiria itakuwa gani? Inakuwa different. So these closing balances zitatusaidia current liability and non-current liability. So I'd like you to note the difference between hapa, itanipatia current liability. For example, if I pick 8, let me just put it here, current liability for year 2019, itakuwa year 2019 itakuwa this minus this, 768 minus 454, 545. That is current liability for that year. Itakuwa ngapi? Of course, non-current, sasa hiyo already have it somewhere. Non-current ni hiyo. Non-current is that one, hiyo haitakuwa na shida. Na ni our 2019, 413, 223, 413, 223. 413, 223. 413, 223. Now, year 2020 will be this minus this. This minus this. 454, 545 minus 0. So it will make be 454, 545. So the non-current liability, this non-current liability, the one that we've said it's the non-current liability class, I'd like you to tell me, will it be for year 2019 or year 2020? Non-current liability, this one. Year 2019 or 2020. It is for year 2019 because it is deferred. It is a deferred tax. It is a deferred. It's a deferred. So let's have an extract now. Now, I think we have done any other working that we need. Let's look at the income statement extract. Income statement extract. An extract cannot balance or it's just that simple. It has just few elements. So we have 2019, 2020, and 2021. So depreciation. Depreciation tulikuwa nayo, this one. And it is cutting across 424, 475. 424, 475. And that 424, 475. So hiyo haina maneno mingi. Then interest ama finance cost. Finance cost is also part of income statement. Finance cost tulikuwa na hii na hii na hii zote tatu kwa kila mwaka. 124, 343, 86, 779, then 45, 455. We are done. That is it. That is the income statement extract. Income statement extract. Then the final one is the balance sheet extract. The balance sheet extract. Now for the balance sheet extract class, we need to be very keen for the balance sheet extract. Balance sheet extract. The final item, the final thing that we need to have. Final thing that we need to have is the balance sheet extract. Let me call it a statement of financial position extract. So statement of financial position, still 3 years, 2019, 2020, 2021. Hope it's visible, right? Now, we know the structure or the format of the balance sheet. We have non-current asset, current asset like that, then financed by huko chini. So what we have here in our case here is right of use asset representing the asset. Sawa. Right of use asset representing the asset. Na right of use asset yetu class tulikuwa tumepata ngapi? The right of use asset. The amount. It was not this one. It was in addition of the 30,000 that we have there. So what was the amount? Right of use asset. $1273,425. So right of use asset hapa, hiyo ndio item yetu ya kwanza. Right of use asset. 1273,426. Like that. We know this is acting like an uncurrent asset. It is an item, a plant. You see, it was a plant. So we expect that it will depreciate so that we get the net book value. So what is the depreciation in year 2019? Somebody. Depreciation in year 2019. Na unajua inapungua as we move on. What is the depreciation? 424. Thank you so much. 475. Less depreciation. 424, 425. Is it 424, 425? I think, yeah. 475, see there? 475. Not 425. 475. Haya. Hiyo ni mwaka ya kwanza. Mwaka ya pili, it will depreciate twice. Si ndio? So itakuwa twice. This twice. Mara mbili. Ipatie itakuwa ngapi? Itakuwa 424 times 2. 424, 475 times 2. Mwaka ya pili. 848,950. 848,950. Mwaka ya tatu inakuwa inaisha. Itakuwa ngapi? Mwaka ya tatu. Mwaka ya tatu itakuwa inaisha. So uongeze 424, 475 hapo. Ili tupate net book value of this item. 1273, 425. 1273, 425. So hii item, its net book value is this one. Hapa najua itakuwa 0. Obvious, tumemalizana na hiyo. Hapa ya kwanza, mwaka ya kwanza net book value. Net book value mwaka ya kwanza 848,951. 848,951. Haya ya pili hapo 420 inajirudia 424, 476. Ndio kama somebody 424, 476. 424, 476. Sasa hiyo ni side ya assets. Side ya liabilities, we know that we have our non-current liability. This. So, non-current liabilities. It is this one. 454, 545. Hapa hakuna, hapa ni 0, hapa ni 0. Current liability ya 2019 ni hii 413 223 then 454 545 hapa hakuna. So that is the extract. That is the extract that you're supposed to give for that question. Kwa hiyo swali ilikuwa marks ngapi? Hiyo swali ilikuwa na marks ngapi kwani? We had some good marks, eh? 10. 10. Is it worth it? I think wangeongeza kidogo, eh? Wangeongeza kidogo because of the kind of work that the question has. Wangeongeza ikuwe kama 12. Naomi amesema not well. Yeah, they could have added this. It has a lot. So class, I think that is it. The question number, this question number B, that one you had done. You had done that. I think we marked. Question number B for boy. See, hiyo mko sawa? That one is okay, right? We can look at the group question now. Is that okay? Just check number B mko sawa, right? But remember to do it again and again. Remember to do it again and again. Only Annette who is saying yes. What about the rest? Mko sawa hiyo? Hiyo ya S and M. Hiyo mko mmefanya. Hiyo mmefanya. I hope there's no one who akona shida ya hiyo. Hiyo ya accounting for professionals. Accounting for professionals. Okay. Class, let's look at question number 2, but before we look at it, wacha kwanza tupumue dakika 2-3. Then we see. Remember, we're just going to look at the overview of the question. Overview of the question. Yeah. So let's continue. Now we are in question number 2. We're in question number 2, and I would like Jane Kamau to read for us the question. And request Jane Kamau to read for us question number 2. You can unmute. Remember, we are supposed to end our session at 7, so that we allow those people who are going to work wapate nafasi. So Jane, are you ready? Jane, are you able to unmute? Jane is not able. Annette? Oh, Jane, Jane anajaribu ku-unmute. Okay, Jane, let's Annette atusomee, and then Jane amemanage. Sawa. So Jane, you can just read for us. Proceed. Nimekuondolea tu ka video. Yes, Jen, you okay? You okay? Proceed.
Question
Ala?
number 2.
Yes. Umeiona?
Question number 2.
Yes, question number 2. Question number 2.
𝗘𝗔𝗦𝗡𝗘𝗕 Limited has owned 70% of 𝗘𝗔𝗦𝗡𝗘𝗕 Limited equity share capital since 1st April 2017. The acquisition consideration consisted of cash amounting to 600 million paid on 1st April 2017. The retained earnings balance of 𝗘𝗔𝗦𝗡𝗘𝗕 Limited at the date of acquisition stood at shillings 870 million and had no other reserves. The draft financial statement for the two group companies for the year ended 31st March 2022 were set out below. Statement
Okay.
of profit. The draft financial statement for the two group companies for the year ended 31st March 2022 were set out below. The statement of profit and loss and other comprehensive income for the year ended 31st March 2022. The 𝗘𝗔𝗦𝗡𝗘𝗕 Limited and the 𝗘𝗔𝗦𝗡𝗘𝗕 Limited
Okay.
are
That's okay.
as follows.
That's okay. We can go to the additional information.
A fair value exercise carried out on 1st April 2017 concluded that the carrying amount of 𝗘𝗔𝗦𝗡𝗘𝗕 Limited net asset approximated their fair values with the exemption of an item of plant and equipment which had a carrying amount of shillings 100 million below its fair value. At 1st April 2017, the plant and equipment had a remaining economic useful life of 10 years. Depreciation is charged to cost of sales. It is the group's policy to measure the non-controlling interest at fair value and the date of acquisition. The fair value of the non-controlling interest in 𝗘𝗔𝗦𝗡𝗘𝗕 Limited on 1st April 2017 was estimated as shillings 1370 million. 𝗘𝗔𝗥 Group adopts a revaluation model to measure its property, plant, and equipment as permitted by the International Accounting Standard AS 16, property, plant, and equipment. The valuation surplus reported by 𝗘𝗔𝗦𝗡𝗘𝗕 Limited relates the revaluation conducted in the post-acquisition period. During the year ended 31st March 2022, 𝗘𝗔𝗦 Limited sold goods worth shillings 200 million to 𝗘𝗔𝗦 Limited. 𝗘𝗔𝗦 Limited reports a gross profit markup of 25% on all its sales. 𝗘𝗔𝗦 Limited still had 25% of these goods in its inventory as at 31st March 2022. At 31st March 2022, 𝗘𝗔𝗦 Limited records showed a deviation due to 𝗘𝗔𝗦 Limited of shillings 140 million, which corresponded with the balance in 𝗘𝗔𝗦 Limited trade payables. An impairment review concluded on 31st March 2022 revealed that goodwill arising on acquisition of 𝗘𝗕 Limited was impaired by 10%. No impairment loss had been reported in prior years. Required group statement of profit and loss and other comprehensive income for the year 31st March 2022.
Okay. And the group statement of financial position as at that date. So thank you so much, Jen, for taking us through that question. Now, class, as we said, the first thing is to identify the group structure and then start working. You start your pro forma, because for this question, There are very many free marks that you can get. Very many free marks. So the first thing, we identify the group structure. So the group structure here. Structure. Group structure. So for the group structure, we have 𝗘𝗔𝗦𝗡𝗕 and 𝗕𝗕. 𝗘𝗔𝗦 and 𝗕𝗕. So we have two companies here and 𝗕𝗕. So class, for the information given here, we are told that 𝗘𝗔𝗦 Limited has owned 70% of 𝗕𝗕. So who is 𝗘𝗔𝗦? Who is 𝗕𝗕? Who is 𝗘𝗔𝗦? Who is 𝗕𝗕? Yes? Who is 𝗘𝗔𝗦? Who is 𝗕𝗕? That's a very nice question. A very nice question. Ala, nauliza kwamba 𝗘𝗔𝗦 ni nani? 𝗕𝗕 ni nani? Na tunauliza hey, yes, 𝗘𝗔𝗦 is the parent, 𝗕𝗕 is the subsidiary. Yes. If 𝗘𝗔𝗦 has acquired 75% of 𝗕𝗕, this is more than 50%. So this is a subsidiary. This is a parent, right? Right? Then the other thing that you need to know before you start your pro forma is to know the date of acquisition. When did 𝗕𝗕 acquire 𝗘𝗔𝗦? Not 𝗕𝗕, but 𝗘𝗔𝗦. 𝗘𝗔𝗦 acquired these 𝗕𝗕. When? It is 70. Oh, 70%. 70%. 70%. When did 𝗘𝗔𝗦 acquire 𝗕𝗕? Date of acquisition, 1st of April 2017. 1st of April 2017. And the date of preparation of the financial. So those dates are very important. So date of acquisition is 1st of April 2017. Date of preparation, date of reporting. Date of financial reporting ni lini? Date of financial reporting, 31st March 2022. Hey, we have 2017 and 2022. Oh, okay. I get something there. 31st of March 2022. Aye, class. What comes to your mind when it comes now to apportionment? Tuta-apportion kitu hapo. Can you see acquisition? What it took place? We won't apportion. Sasa the question will be very simple for us. Unaona ni muhimu ku identify. This is very important to identify. Now the question is very good for us. So even the items of the income statement for subsidiary, tunachukua vile ziko and then tuna adjust. Sasa with that information class, I can move direct to having my pro forma. Direct to having my pro forma. When iko nini? I just have my 𝗘𝗔𝗦 Limited. Group consolidation. Or statement, 𝗘𝗔𝗦 Limited, consolidated income statement. Income statement for the year ended. Uh, 31st of March 22. That is now nice. Pro forma. Ukishajua hivyo class, tafadhali, even in your exam, just go direct to this. Start posting. Start posting. Let's start posting here. I have revenue. Najua hapo my sharings are in 1,000 and have it like that. They're in million. Sorry. Sharings in million. Start posting. Revenue. Hii inachukua ya huyu jamaa 5100. Naongeza huyu mwingine 1920. na naenda next. Cost of sale. Cost of sale naenda next 4050 plus 1110. Next, gross profit. Gross profit, I know it will change, so therefore gross profit we usually don't pick. We usually don't pick. Then you go to the next, distribution cost. Like that. Admin expenses. So distribution is 240 to 10. Admin ni 480 to 30. Hivyo tu kwanza. Plus investment income tulisema you can put it or leave it. In our case, do we put it? Investment income. Na tukumbuke tukuongeza. Kumbuke kwamba ni ya kuongeza. But in this case naona tu iko tu side moja. So let's leave it. Let's leave that alone. Leave it. Ama tuiweke. What do you think? Iko tu pande moja hapa. Do you have any other information that will affect our investment? Ama tupate hiyo mark. Wacha tupate hiyo mark. Investment income, kwanza hiyo ni free mark kabisa. Investment income 160 plus 0. Hiyo sasa kwanza naweza peleka direct hapa. That is just direct free mark. Hiyo examiner anafaa kuwa amenipatia marks haraka haraka. Then what else do we have? Finance cost. Finance cost. Finance cost niko na 85,125. Wengine wakiangalia ceiling class, this is what you'll be doing. Tafadhali. It will really save you big. What else do I have? Okay, from there I get profit before tax. Hapo sawa. Income tax. Income tax natoa ngapi? Natoa 175, 125. 175 plus 125. And then profit for the year. Nitamalizia hapo kwanza. Profit for the class. You know you have made a step by doing this. You made a step. You made a very big step by doing this. You are in a better position. Already you have 1 mark. Hapa hivi. Nataka tuone which other mark can we get from this without struggling. Which other mark can we get at this point without struggling? Hiyo ndio nataka tuangalie. And that is the way this is done. Distribution. Great Faith ameona distribution hainaga any adjustment by the way. Hiyo hebu niongezee. By the way, that one just add for me. That's another mark. Thank you so much Faith. Hivyo ndivyo unapita hii kitu. Faith nipatie distribution. Ni ngapi? 450. Asante. Imagine. Hiyo hata nikufikiria tu. Yani addition 450. Haya. Any other yenye hatuta struggle sana that you can identify? So but tuko na marks Najua how I told you. Finance cost. Wapi wa finance cost? 85,125. Finance cost 85,125. Anything that they have mentioned it affect our finance cost, just check kama kuna any information inataja our finance cost. Kama hakuna, that's still a free mark. Kama hakuna, angalia additional information kama kuna mahali inataja hizo vitu zetu. If there is no, that's still another free mark. Hakuna 210. Aya. Hii swali sasa sisi tunamaliza bila hata kufanya kitu. Income tax still a free mark. Patia hii pia. Class kuanguka hii unless unajitakia 300. Just imagine. Hii yenye tunafanya, imagine mtihani. Yenye tunafanya hivi. Unless hujakuwa ukifuatilia what you've been doing. Hii kitu free marks ziko mingi sana. Kwa group is a savior. Haya, I think hizo items zingine tunafaa tu work. Now, ukishafanya hivi, hizi ni marks. Mwanafunzi hata sasa mwenye ataacha tu hivyo. Hiyo ilikuwa max 10. Tutahesabu tu. Vile tunahesabu. Nasema any 6 give that student correct. Huyo ako na 4. Oh, sasa si atapata more than half. More than half of that question. Na hajafanya anything in addition to. So hata kama tu hangejua vile adjustment are done, huyo mwanafunzi ako sawa. So group question passing is very simple. Now sasa nataka tuanze kuingia deep. Tuanze kuona kama tunakumbuka what is affecting what. Like in my revenue, what do affect revenue? Just mention the name. What do affect revenue? Kuna vitu 5 tuliongea. Intercompany sales. Intersales. Yaani mimi naenda tu naiangalia iko wapi na nakuja naweka hapa niko sawa. Yaani don't struggle at working group, mimi working kwa group na nikipata marks. Now check for me. What was the intercompany sales in this question? Hiyo tu ndio natafuta kwanza. Yaani be specific. Na Faith ni kama umeiva hii kitu I hope you guys you have been able to see this It is there. 200 Additional information number 4. Faith Faith umeiva hii kitu sana. Now do we add or do we less? Do we add or do we less in our revenue? We less. You less 200. And this 200 will still affect our cost of sale. Sasa tupate hii mark kwanza. Our revenue. Na tunamaliza, nimebakisha items ngapi? I'm finishing this. 6820. 6820. But before I continue, I'd like to know kama tuko pamoja na kila mtu. Nataka tubebe kila mtu. Are we together? Are we together? Are we together? Kila mtu. Julia, yes. Annette, yes. Mwanamisi. Great. Now we move to the cost of sale. Cost of sale sasa hapa ndio ka kitu kidogo at least inatupinch kidogo, inatupinch kidogo. Tunatafuta nini? There are several items hapa to affect us. The first one, intercompany sale tumetoa. So depreciation under charge and the unrealized unrealized profit on closing stock. Let's look at them. We can compute them here. So if my intercompany sales is 200, I've been told that 𝗬𝗣𝗑 Limited reports a gross profit markup. Imepewa markup. Then on all its sales, 𝗬𝗣𝗑 Limited still had 25 of these goods in its inventory. Sasa hii kitu ni nini bwana? To get the UPS class, it will be RIS times the margin, profit margin. So RIS tunaambiwa ni 25% of 200. 25% of 200 class of 200 and then times nimepewa markup of 25. Sasa kama markup ni 25, hapo lazima tufikirie vizuri markup ni 25%. Margin itakuwa gapi? Kwa sababu we said we use margin usisahau hiyo tena. So if this is 25 over 100, so margin will be 25 over 125. So times 25 over 125. How much will that be? Wangapi? 10. So usisahau hii. Ukisahau utapata vitu tofauti. So minus 10. No, plus 10. And then we check the depreciation under charge. Asante. Depreciation under charge tutapewa na item wameongelelea additional information number 1. Si ndio? Hiyo plant. Na useful life yake ilikuwa gani? Simunipatie depreciation under charge by the way. Bwana hiki kitu ilikuwa rahisi. Depreciation under charge? Si plant revaluation. Hiyo value ni 100. Divide by useful life which is 10. Si inabaki tu 10 pia. Depreciation under charge itakuwa 10. I'm done. Class nipatie pia hiyo another mark. That's another mark. 4980. Situtoe hiyo tupate our gross profit hapo. Pate our gross profit. Pate gross profit yetu. Gross profit itakuwa ngapi? Gross profit 1840. Sasa tumebakisha, imagine huyu mwanafunzi ashapata hii swali yote, amebakisha tu kitu moja, admin expense. Na hakuna kitu amefanya, my friend. This thing simple. Haya, tumebakisha admin. What do affect admin? What do affect admin? Kila mtu anajua bwana hizi vitu. Admin, tulisema kuna kitu inamuaffect. Admin expense. The impairment of goodwill. So lazima twende tutafute goodwill tafute goodwill yetu. So we prepare the goodwill account. Goodwill account. Goodwill. So we can prepare our goodwill. Goodwill account. Na hii goodwill yetu class, tunatumia partial ama full goodwill method. Na hii ni ya Twende Limited. Goodwill ni ya Twende. Partial ama full. Partial ama full, unaangalia chenye umepewa. Sisi tumepewa NCI. So tunatumia full. Na kwani mnapenda group aje? Yeah. Kwani mnapenda group aje? That's good. The cash consideration yenye ililipwa ni ngapi? Consideration yenye ililipwa ni ngapi? Yenye walilipa cash. Haki nani? Watu wakazane kabisa. Do more. Consideration 3600. That's good. Then we add the NCI. NCI walituambia ni ngapi? Non-controlling at fair value. NCI tuangalie NCI. NCI iko pale direct 1370. Yaani hii ukishajua vile inafaa inakuwa total consideration. Total ya hiyo. Total consideration. Total. Ongeza hizo zote. $49.70. And then less net asset at the date of acquisition. So class, items za net asset ni gani? Net asset ni gani? Tunakuwa na the items under ordinary share, under equity, right? Ordinary share ni ya kwanza. So nipatie hizo items. Ordinary share, haya, retained earning na revaluation, si ndio? So tuanze tu na ordinary share. Na ni za nini? Tunaangalia hii side yetu ya Twende. So ordinary share ya Twende ilikuwa ngapi kwani? Ama we've been given these items. Naangalia kama pia umepewa. Naona pale mwanzo tulikuwa tumeambiwa something regarding the retained earning and such. Acha tuone kama zitatusaidia pia. So we've been told that the acquisition consideration consisted of cash amounting to that million paid on that date. The retained earning balance of Twende Limited at the date of acquisition stood at so walitupatia retained earning, So kama ordinary share ni 3 plus retained earning of 8 what? Retained earning ni 870. Revaluation nayo ilikuwa ngapi? Revaluation 100. So if that is the case, then what is the total? Yani kitu bwana ni rahisi. Kishajua what is supposed to be done. Aish. Na inakuwa rahisi. What's the total? Total net asset 3970. So si tutoe hiyo tupate our goodwill at acquisition. Goodwill at acquisition itakuwa thou less impairment. Hii ndio tunataka. Na already niko sure, already niko na item yangu na computer hapa. Niko na goodwill, eh? So impairment percentage iko ngapi? 10%. So 10% of the 1,000 itakuwa 100. So 900 is my goodwill at reporting. Nimetafuta item ya, yani nimeanza kuwork for my balance sheet. Balance sheet nimeanza kuwakia at reporting. So niko already na hiyo. So I wanted the 100 plus this 100. So ukiziongeza, kiongeza hiyo 100. Sasa tumalizane na hiyo ili tukuje hapa tupate profit before tax. Kumba hizi tunatoa the expenses. 810. So si tutoe this minus that, tupate profit before tax. Uje tutoe tax yetu, tupate profit after tax. Investment, no. Oh, yes. Investment. Na faili uko gangari sana bwana. That's good. Yeah, that was investment. Oh, that's good. That's very good. Haya, sawa. Give me now you take this one, add the investment. You need add. Then we less the 3. That's the 3. So group question is a savior. Together with the cash flow. Cash flow tutafanya ingine. Ile, I hope you guys munafanya ile. Next week itakuwa tena kurudia kufanya published cash flow hapa pale like that. Lazima tutazifanya. Haya, mnapata ngapi hapa? This plus this minus the 3. 530. So 530 minus 300 is 230. And that is done. Uko na marks zako 10 fresh. Na umeanza ku-earn zingine on the balance sheet. So hii swali ukikuwa tu makini tafadhali. The rest you can get ni 18. Ona nimeanza hata kupata ya balance sheet mapema. Niko na goodwill. And I know in the balance sheet there are also some items which are direct. So class, please go and attempt. And then leave alone the retained earning ya balance sheet. Tulisema hiyo wachana nayo, hiyo wachana nayo. So for the remaining part of the balance sheet, please go and do it. And if possible, you can share. What you have. And then we mark so that next week when we meet, we look at the question number 1, the theory, and that will be done. Is that okay? Then maybe a revision in your next week. Tunaweza anza na ile swali ya cash flow mulifanya. And then we move to something else, published account, what else, and any other thing that we shall run. So balance sheet, enda umalizia, and then share what you have. This is the goodwill that you're going to use, 900. So na kuna other free items pale. We kwanza anza. First of all, always make sure that you start with the free items. Always start with the free items. Panga proforma yako, this thing, the way you found me doing this. First of all, I have my proforma, and then I'll start adjusting baadaye. So proforma, any free mark that I know that is not affected by anything, I put it here. Because whatever mwalimu will be marking is hapa. We just counter check our answer with what you have here. So if I have an item like investment, direct hapo, iko sawa. Hiyo ni mark. So to save time, that is how you do this question. Within very short period, you are done. So that is it for today, class. Let's meet next week. God willing, let's continue revising. So go and look at that question together with the first one, and tukipatana tutazimalizia. So that is it. Have a blessed weekend. Goodbye. Bye.